I'm Charlotte McLeod with the Investing News Network, and here today with me is Gerardo Del Real, co-founder of Digest Publishing and co-owner of Resource Stock Digest. Thank you for seeing me today. Great to see you.
Charlotte, it's so great to be in person and to see you again in person. I know we've had several conversations by way of phone and Zoom, but there's nothing like that person-to-person contact. So thank you for having me.
Yeah. So great to have you here. And I know that you've just arrived. We're here at the New Orleans Investment Conference. Usually I would start by asking you about sentiment on the floor, but maybe instead we can talk about sentiment in the overall resource sector, leaning specifically into gold, because we know that it's, a little bit lackluster right now.
Look, I think it's interesting times, right? We just witnessed today, right, on the day of filming, a 1,200 point swing in the Dow, in the overall indices, right? We had a market that was down some 400 points and ended up almost 900 points. And so I think in the near term, we can expect more volatility. I think that we're going to see some liquidity issues in the bond market that are going to materialize in a more profound way. And I think for the average investor that just looks at their 401k on a day-to-day basis, it's going to be wild times for the next several quarters, right? Where we're hiking rates aggressively into what I believe is already a recession that is not priced into the market yet. And so I think we have more volatility there. How that translates into the resource space is this. We have a dollar that I think will continue to surge for at least another quarter and possibly two. I think that's going to provide some headwinds for the gold price. It wouldn't surprise me to see gold fall below the $1,600 level briefly. I should caution briefly. But if we look at a 5-year chart and we look at the history of all-time highs, this is exactly what played out here a few years back when we made those new all-time highs, right? We came up from a base of 15 to 1600, and then we step-laddered up all the way to 2000. Everyone got excited, and now we've been consolidating ever since. So it's a long-winded way of saying, I think in the gold sector, some caution ahead for at least the next quarter, but some amazing bargains if you're a patient speculator that has capital to allocate and can wait a quarter or two to see some phenomenal returns.
Right, and so talking about the dollar, strength in the dollar, that's hurting gold. This is something that we've gone over before. For you, is that turnaround in the dollar and hopefully upturn in gold, is that tied to what the Fed does with rates?
I think, look, markets always front run what comes next, right? And I think, a part of the rally today, and it's just one day, and I hate to look at a day and, extrapolate out, but I think a part of the enthusiasm today in the big turnaround was a reading of the minutes that showed that they're at the very least watching for instability in the bond markets and how aggressive they can actually be with these rate hikes moving forward. So does that mean that the Fed stops hiking rates in the next meeting? No, I don't believe so. I think they'll hike again. But I do believe after this meeting, they'll maybe slow the pace of that down, because you're going to break the bond market if you continue to do it this way. It's not sustainable with the debt that we have to service here in the U.S., and it's definitely not sustainable overseas for a lot of economies that, frankly, are already showing signs of imploding because of the rising interest rates and the debt levels that they're carrying. So that's again, long-winded way of saying I think dollar strength continues. I think it's the cleanest dirty shirt in the laundry basket. But again, I still think there's some phenomenal opportunities out there, especially in the resource space.
Okay, and so where are you seeing those? And we can talk broadly first about maybe commodities. Which commodities are you liking right now?
My absolute favorite is lithium. And I'm biased. Look, what my largest personal holding is a lithium play that has done phenomenally well for me personally. I'm up some 4,000% on it this year. And I think, frankly, it's a stock that can quadruple from these levels here within the next 12 to 18 months. So there's bull markets somewhere, right? They're not everywhere right now. They're not in the gold price, not in the short term anyhow. The major indices, definitely not. Lithium absolutely has a raging bull market. We're up some 500% this year in the lithium spot price, right? And it shows no signs of slowing down. So that would be my favorite sector. If I had to pick one sector, it would definitely be the lithium space.
Okay, so lithium, we do know, of those who follow the market will know that it is out quite a bit this year. We do usually hear you shouldn't jump in when it's super hot. So, but you're telling us that there's room to run here. So can you describe that?
Look, I read a report that had some supply-demand fundamentals, and this report was done by a group, Benchmark, that does phenomenal work in the critical metal sector. And they're forecasting a bull market in lithium until 2050, if I recall that report correctly. So let's assume that we shouldn't be that bullish and we shouldn't be that excited. It's at the very least the next 10 or 15 years of bullish trend in the lithium price, right? Will it continue to go up 500%, 1,000% every year? Absolutely not. But it doesn't have to if you can identify some companies that have exploration upside, are anchored by a robust resource, know how to manage a share structure, and have management teams that know how to monetize a bull market. And there's definitely some companies out there that even at current levels after the rise in price are still bargains in the sector.
Okay, yeah. So let's think about how we can hone in on lithium companies that may be successful because there's a lot of things you could look for. I know many of them want to do deals with car makers, right? Or you could look jurisdictionally and see, where are the gigafactories being built. How are you approaching lithium companies?
You know what's funny about that? The lithium sector is so bullish right now, and supply is so little, and demand is so great that it's actually the automakers that need to do the deals with the miners and the exploration companies. And I think there's going to be a mania here in the next 5 years where automakers are stepping over each other to cut deals with companies that have a scalable resource. And so the one company that I referred to earlier that I've done very well with, Patriot Battery Metals is the name of this company. We've talked about this a few months ago. Despite the volatility in the markets, it continues to make brand new all-time highs every month. And look, they're in Quebec. They're right next to hydropower, which is cheap, clean power. They have a resource that I believe will be a triple-digit million-ton resource, meaning at least 100 to 150 million tons here in the next several months. And they have 50 kilometers of trend, and they've only explored 2 or 3 kilometers of that trend. A company like that is going to be approached by absolutely everybody. Imagine a Tesla being able to boast about producing green lithium, clean lithium, right? And having a life, a mine life that can extend 50, 75, maybe 100 years. Patriot has that kind of potential. And so when I look for how to get 10 baggers, how to get 20 baggers, how to get a 100 bagger, I want scale, I want good share structure, I want companies that are capitalized. Patriot checks all those boxes, and it's in Quebec.
Right. And so let's talk about the green angle as well, because, we talk about electric cars, right? And we like them because they're green. However, there is discussions now happening about, okay, so how green was the metal that you're putting into the car? So would you rank those companies that can produce a greener product above the ones that cannot?
This won't make me any friends with like the green side of things. I think so much of that is just marketing. And I think just so much of that really is just positioning for image sake. I do believe there is an effort to produce cleaner vehicles, right? And cleaner electricity. Absolutely believe that. And there's a lot of bipartisan support for it, right? Because it's an easy sell to the public. And it's the right thing to do. However, when I actually look at the dollars that are being allocated into making clean lithium or producing clean energy, there's a lot more talk than there is, actual capital going into it. They're just desperate for supply. And, smartly, they're positioning as if they want to make clean power and clean lithium. They just need it. The automakers need it. They don't have a choice. They know that the world is changing, and I think, they're going to have to pay up.
Yeah, I think you're right. It will become a question of, okay, we just need everything. One thing that I've heard a little bit about is whether automakers may pay a premium for those green products, which I guess might be a thing.
I think the premiums will be increasing on a year-by-year basis for at least the next 5 to 7 years. I think there's going to be enough of a shortfall in the lithium space and enough demand that they're going to have to come in and partner up and maybe even offer, a company like Patriot offer to build the facility and sign offtake agreements at a very generous premium to a company like that. And there's other companies in the sector as well that are going to do very, very well. That's just the one I'm most biased on because it's my largest personal holding.
Okay.
It's done well for me, right?
Fair enough. And so lithium, obviously we know we need that for the lithium-ion batteries for the cars. What about the other battery metals? I know there was a lot of hype in previous years. Some of it's gone away. What are your thoughts on the other ones?
You said the right word in your question. You said need, right? We need lithium, right? We don't need gold. You probably want to have some when things blow up, but we don't need gold, right? It's a great hedge. It's a great preserver of wealth. But we don't need gold. We need the lithium, right? The other metal that we're going to need is we need uranium. We need uranium. And before everybody says lithium is a mineral, I'm aware, but let's call it a metal. But we need uranium. It's one of the few things that Greta and Republicans and Democrats and leftists and libertarians like myself all can agree on. We need uranium if we're going to be independent of this fossil energy that we've had for so many years. And there's actually a lot of bipartisan support for that. There's real capital, especially here in the US right now, into developing independent critical metal supply chains, specifically with uranium. And so much of it is refined by Russia, and so much of it comes from sources that aren't the friendliest to us or a lot of other countries. That I think that's another sector that for the next 5 years, you have an opportunity to make incredible amounts of money if you're able to identify some of those better companies out there.
Right. So, yeah, this is definitely a trend, building those supply chains within countries and being careful, maybe not to rely too much on countries like Russia that can have bad things happen to them. So, maybe we can talk a little bit about that, because my concern with that angle is always like governments are pretty slow. Maybe you will get support from them, but it could be slow, it could be not enough. What are your thoughts there?
Here in the U.S. and in North America, real dollars are already being spent, right? President Biden, however you feel about his politics, just signed an act that got bipartisan support where hundreds of billions of dollars are going to go into this. And so that ball is already rolling, right? The one thing that hasn't happened is we haven't seen that uranium price spike that we saw in the last cycle. And I actually believe the fundamentals for this cycle are better than the last cycle. And if you recall, in that last uranium cycle, prices went from $10 to $140, right, in spot prices. I think this time we'll overshoot to maybe the $200 mark. And so when we're sitting at $50 right now in the uranium spot price, that's your upside on the spot price. We all know that equities provide a lot more leverage than the spot price does. And so again, if you can identify some companies in the sector, you're going to do phenomenally well. And I think we're in the early innings of the uranium bull cycle. I think we've had one leg up, half a step back. And I think we're on the verge of another step forward.
Okay, so in lithium, you're looking at the exploration side. Is that also true in uranium? And the reason I ask is because, people would tell you that you can get into the big ones right now. They're quite available. So thoughts on that?
Very unique opportunity in the uranium space where you can get into the big ones and maybe companies that have assets that can be put into production within the next 6 to 12 months. Companies like UEC, for example, that have production-ready facilities that have the pounds in the ground, low-cost pounds in the ground in the U.S., right? And they just struck a big deal here recently that I think the market didn't appreciate, but will appreciate here in the near term. But you can get into a UEC, you can get into a Cameco, which just struck a big deal, right, with Westinghouse. Or you can get into a company like a Labrador Uranium that's got a district scale land package that's commodity rich. It has uranium, it has copper, there's potential for gold. It's got a great technical team, great share structure, hasn't participated in the upside that a lot of other companies did earlier in the year because it went public here over the summer. So I think, again, you have a unique opportunity. You can pick a producer, a development stage company, and an explorer and have a basket that's mixed and see which one wins for you, right?
Yeah, and okay, so since we're kind of going in this energy direction, we have to ask about oil and gas as well, because we have this energy crisis over in Europe that's related to what's going on there. So are you looking at things like oil and gas? Are you going more with the greener side?
I'm definitely sticking with lithium, with uranium, with copper. I consider copper a battery metal, right? I mean, you're not building those electric vehicles without a lot of copper there. So that's my expertise, and my background is more geared towards those metals. Oil and gas, my business partner and friend Nick Hodge has been spot on the past couple of years. So I would encourage anybody that's looking for oil and gas plays and advice to follow Nick at one of our sites and lean on him for information, because he's definitely more savvy in that space than I am.
Okay, so I think we've covered a lot. Are there any other areas that you would highlight for investors right now in the resource market? I think, ways that they can make the best of what's going on.
I think we need, as speculators and investors, we need to be less passionate about where we make our money. And what I mean by that, and again, I'm not going to make any friends here. I know I'm at a precious metals conference, but I think so many of us for a long time tend to get married to, I just need to make money from gold stocks, or I just need to make money from gold, or silver to the moon, or crypto to the moon, whatever your passion is. It's great to be passionate about a sector. At the end of the day, if you're not doing this for fun, if you're doing this to make money, you should just go to where the trends are the most favorable. And yes, it's great to have a diverse portfolio, but there's a raging lithium bull market. There's a uranium bull market that I think is going to make fortunes for people over the next 3 years. Sure, have some gold as a hedge. Copper, I think, in the next 5 to 10 years will be phenomenal for copper. So there's some trends that are irreversible for a long time. Be less agnostic about where you make your money from and just go and make some money.
Okay, yeah. All right. Perfect way to end this. And it is a precious metals conference, but we're going to take our blinders off. So thank you for coming to talk about lithium at a gold
Yes.
conference.
A lot of upside still left in gold. Just the next 3 months might be a little bumpy.
Okay. Well, thank you so much. Once again, I'm Charlotte McLeod with the Investing Network, and this is Gerardo Del Real.